The top business stories live from the Sky News City studio. More ChatGPT drama as OpenAI appoints a new chief executive with the ousted Sam Altman heading to Microsoft. Shares of Ousted Group plunged by 15% as the plant and tool hire company warns full-year profits will be less than expected. Plus, I'll be joined by the chief executive of the sustainable nutrition brand Huel as it reports its first pre-tax profit following a surge in sales. Good morning, this is Business Live with me, Ian King, with a special online edition. You'll find us on the Sky News website, app and on YouTube this morning. Well, it's been a dramatic weekend at OpenAI, the parent of ChatGPT and just about the hottest tech company on the planet right now. Well, on Friday evening, the tech world was stunned when the board fired its co-founder and chief executive, Sam Altman. OpenAI's chair and co-founder, Greg Brockman, resigned in sympathy. Well, OpenAI shareholders, including Microsoft, demanded his reinstatement. But on Sunday night, OpenAI named Emmett Shear, the co-founder of the streaming and gaming service Twitch, as its new chief executive. And then this morning, more high drama. Microsoft's chief executive, Satya Nadella, announced that Mr. Altman and Mr. Brockman would be joining Microsoft to lead a team conducting research into advanced artificial intelligence. Well, joining me now to talk about this is Isabel Asher-Hamilton, senior reporter at the Daily Upside. Isabel, welcome to you. Let's go back to the start here. We still don't really know why Sam Altman was dismissed, do we?
No, there's been some slightly conflicting reports. The public statement that the board gave was that he hadn't been entirely candid with them. And I've seen a few reports where sources say that it wasn't one particular thing, that it was sort of a problem that was building up over time where the board felt they couldn't really oversee him. There have been some other reports that it was to do with AI safety and Altman taking the company in a more commercial direction, because OpenAI used to be a non-profit. It's not anymore. It's looking for ways to rapidly commercialize AI. And the way the board is set up and structured, they haven't got financial stakes in the company, and they're more tasked with the sort of theoretical preservation and safe guidance of AI. So that may have been a factor, or it may have more been to do with internal politicking.
What I find amazing about this, Isabel, is that, Microsoft have a 49% stake in OpenAI. Then you've got other VCs, such as Khosla Ventures, who also own stakes in the business. A majority of them seem to want Sam Altman and Greg Brockman to remain, and yet the board has somehow disregarded their wishes.
Yeah, again, it's to do with that unusual structure that I mentioned. Sam Altman was in negotiations to come back over the weekend, it was reported. Those fell through, and apparently one of the stipulations that he had, if he was to come back to OpenAI, was to rejig that structure of the board and completely replace all the members who are currently on it, who of course ousted him.
There are rumours rife that other employees at OpenAI, including the interim CEO, may come over to Microsoft with him. Where does all this leave OpenAI itself?
In a really tricky position is the answer. I think it's absolutely right. Probably a lot of staff will move to Microsoft. Satya Nadella said that Brockman and Altman were going to start this new sort of unit inside Microsoft with colleagues. He didn't say who those colleagues were, but there are some OpenAI staff who publicly said that they were sympathetic towards Altman and who said that they would quit if he really remained gone from the company. Now OpenAI has got Emmett Shear, and Satya Nadella says that he's going to completely support this new version of OpenAI, but really kind of if you're Microsoft and the reason you have this investment in this company is for it to sort of build products for you and for you to have a sort of direct line to the most exciting generative AI company that's out there at the minute, why have two? I can't really see it lasting that well. And also, if you're Sam Altman within Microsoft, what's your relationship to the stuff that OpenAI does now? It's really, really awkward.
It really is. Just how much of a coup is this, though, for Microsoft to get these guys on board?
Well, Microsoft was, pretty quick on the uptake. OpenAI were the ones who sort of set off all of the generative AI news that your viewers will have seen over the past year. That's almost a year ago now, or maybe a bit more, that they released ChatGPT, and the public first got a taste of just what this kind of technology is capable of. So they've kind of been setting the pace. So yeah, for Microsoft to have aligned to them is really, really exciting for them. And seeing all this turmoil erupt and other investors get really upset and stuff, that's not great, having enjoyed a year of being tied to the most exciting company.
Obviously, OpenAI, as you say, it has to go its own way now. But I mean, how long before ultimately it just gets absorbed into Microsoft? Is that the way this plays out ultimately, do you think?
I honestly don't know. Emmett Shear, the new CEO that they've brought in, has publicly talked about being a little bit slower with developing AI and, taking a more cautious approach. So he's kind of publicly, at least, a bit more safety minded, which I think at the end of the day, if you're Microsoft and you've already got Sam Altman in your camp, who is maybe more excited about developing commercial opportunities, then who are you going to pick?
OK, Isabel, got to leave it there. Appreciate you joining me today. Thank you. Some other business news stories for you now. And shares of ousted Group plunged by 15% this morning after the plant and tool hire company warned that full-year profits will be less than expected. Well, the FTSE 100 company, which does the majority of its business in the United States, said sales in the 3 months to the end of October had been hit by lower levels of emergency response activity, with a significantly quieter hurricane season than seen in recent years and fewer naturally occurring events such as wildfires. It said the writers and actors strikes, which had hit its film and TV business in Canada significantly, had also persisted for longer than anticipated. The world's biggest contract catering company said today it expects to grow profits in 2024 by around 13% as it continues to win new business. Compass Group, which provides catering services to workplaces, schools, colleges and sports stadiums around the world, said that with around half the market not yet using outside contractors to provide meals to employees, students and customers, there was still plenty of room for growth. Well, the company, whose clients include Shell, Google, the US Pentagon and the Wimbledon Lawn Tennis Championships, was reporting a pre-tax profit of £1.75 billion for the year to the end of September. That was up 19% on the previous year, but just shy of expectations, and the shares have fallen by 4% this morning. And Music Magpie, the refurbisher and reseller of mobile phones and electronic products, said today it was in early-stage takeover talks. The would-be buyers of BT Group and Aurelius Group, the private equity firm that last week bought The Body Shop. Well, the news comes after the Daily Telegraph reported at the weekend that Music Magpie had put itself up for sale. The Stockport-based company was founded at £200 million at its stock market flotation 2 years ago, but was valued at just £20 million as at the close on Friday night. The shares have risen by as much as 33% this morning. Friday night's modest gains on Wall Street were followed by a mixed session overnight for stocks in the Asia-Pacific region. Nikkei in Tokyo leading the side down there. As you can see, India was also lower. Well, that's been followed by mixed trades this morning in continental Europe. Here are the main continental European indices. As you can see, the lady laggard there is the DAX in Germany. And the major reason behind that is that Bayer, the German pharmaceutical giant and a big DAX constituent, is off by some 18% in Frankfurt. And that was after it scrapped a late-stage trial of an anti-clotting drug that had previously been seen as one of its brightest prospects. Well, in London, the FTSE 100 is also slightly in negative territory, only 12 points or so to the downside there. Healthcare stocks are weighing on the index. In terms of the leading fallers, well, ousted and Compass, which I mentioned earlier on, they're both the leading fallers on their trading updates. The distributor Diploma Group, which is the FTSE's newest member, that's the leading gainer, up by 8.75%. That was after its results came in ahead of expectations. Outside the FTSE, Currys is ahead by 3.5% after it received a push from one of the brokers. But Sirius Real Estate is off 3.5% on news of a sale of new shares. The chief executive will be on our afternoon programme at 4:30. On the foreign exchange markets, the US dollar has been at a 2-year low amid mounting expectations that US interest rates have peaked. You can see sterling more or less unchanged against the greenback or the euro. The single currency, meanwhile, up just under 1/6% against the dollar. As for the oil price, well, that enjoyed a decent rally on Friday evening, although it has fallen now for 4 straight weeks. It's continued with that this morning. Barrel of Brent crude will currently set you back $81.76 a barrel. That's up just under 1.5% on the session. Well, joining me now is Hay Bathgate, Head of Investments at Atomos. Hey, good to see you this morning. Let's start with Compass. I mean, extraordinarily well-run company with very good market positions, but a bit shy of expectations today.
Yeah, they were putting a very positive spin in their statement, obviously talking about it very positively. I think the market's a bit upset because actually, if you look at it, they've passed through some of the inflationary increases, which has obviously flattered the end result. But usually when companies are talking about big sort of M&A expansion and so on, that's when the markets sort of just pause for breath. And as you say, the result's not quite as good as what had been expected. And this is what we're seeing in the markets at the moment, particularly if companies miss even by a small amount, they get completely punished. And, that's no different here. So
yeah, even though they have announced an increase in the dividend as well.
Yeah, that's right. Well, of course, there's no shortage of dividends in the UK market at the moment. And with the autumn statement tomorrow, obviously we're looking to see whether there's going to be some sort of stimulus or some sort of incentive to invest in the UK stock market, which remains a very unloved market at the moment.
It really does. It really does. I mean, as I say, it's a very well-run company. We shouldn't forget that. I mean, also in the FTSE today, Diploma, not one that is widely known really outside the city.
Yeah, that's right. They do control systems in the industrial sector, so it's it's quite a niche play. Again, numbers come in quite significantly ahead of expectations. And yeah, again, we see that just the disparity. If you beat your numbers, in a meaningful way, it's having disproportionate impact on the share price. So obviously trading very well, as you were alluding to earlier.
Yeah, now we've been talking about OpenAI this morning, and I mean one of the themes there was that Sam Altman wanted to come up with a rival chip designer to NVIDIA. Who we hear from tomorrow.
Yeah, well, of course, in NVIDIA, I mean the numbers are staggering. There, we're looking for a 4 billion increase on quarterly earnings. So when you talk about large companies in the UK and then you compare them to large companies in the US, they're in a completely different league. Of course, NVIDIA trading very close to all-time high in share price terms, so it is priced to perfection. But as we saw the last time, they just might hit these numbers again.
You think that's possible?
I think it's possible. I mean, I think what's really interesting at the moment is obviously NVIDIA are providing the chips that enable the AI processing. What we're really looking forward to now is the practical implementation of AI, so which sectors are going to be disrupted from this AI technology. And I think that's really the next play for markets. We've seen the first stage of the chip manufacturers and so on, and now we need to see which sectors are going to be disrupted, which companies are going to help sectors be disrupted as well.
Now, you touched just now on the autumn statement, of course. One of the big things that we're expecting is full expensing of business investment. Is that a game changer for the UK economy?
Yeah, I don't know. It's been quite interesting, isn't it? I mean, you always see what the government does in the weekend before they sort of test the press with a few things, and obviously just to tweak it in advance of the statement actually coming out. I don't think we're going to see anything that groundbreaking. I mean, there was talk of having some sort of ISA-only investment for UK companies. It looks like they've pushed that out a bit. So there's been some tweaks at the edges, but unless they're saving something big for the day, which of course they could do around some of the tax treatment in terms of income tax, although they seem to have ruled that out as well, it doesn't seem like there's going to be overly much there.
Yeah, I mean, a so-called British ISA, I'm just baffled by. I mean, if you talk about, a company that we've just been discussing, Compass, I mean, the majority of its sales now come out of the United Kingdom, but it's UK listed. Does that count in a British ISA?
Well, that's the thing, isn't it? Are they going to target small and medium-sized companies, or as you say, 80% of the earnings of the FTSE 100 come from out with the UK? So who are they actually going to provide a stimulus towards? Or do they do something in the investment company sector? I mean, that's an obvious place to look. But again, does that directly help the UK economy? Probably not. I think they need to do something sort of face-saving, because the UK market is just seeing an exodus of companies delisting. And we can see that companies that are delisting from the UK, CRH and the like, relisting in the US are moving to a substantially more premium rating.
Yeah, I mean, there was also talk about a reduction in inheritance tax. I mean, if inheritance tax were to be abolished altogether, does that have an impact on AIM? Because obviously, if a lot of people buy AIM stocks to avoid inheritance tax. Yeah,
that's right. So you get a big part of the AIM market, which is business property relief qualifying. Yeah, so at the margin, that would definitely make a difference. Yeah, it's kind of a funny one. I mean, again, inheritance tax is it's the stealth tax that a lot of people don't realise they've got to pay, because obviously it happens after death. I'm not sure, if that's actually going to happen in practice. But yeah, I mean, who knows? There seem to be some kind of strange things being thrown around.
Yeah, quite so. Hey, good to see you as ever this morning. Thank you.
Yep.
Well, whilst Wednesday's autumn statement will give clues about the UK government's plans for the next 12 months, Italy's public finances are also back in the spotlight. Prime Minister Giorgia Meloni's recent budget promised €24 billion in tax cuts and spending increases, raising the budget deficit next year to 4.3% of GDP and raising concerns that Italy faces cuts to its credit rating. So how are Italian businesses navigating this environment? Well, I've been speaking to Angelica Donati. She's president of ANC Giovanni and head of business development at Donati.
It already has started to lose momentum, unfortunately. We just had our ISTAT, which is our National Statistics Office, release its updated forecast for 2023, and the GDP was supposed to grow 2%, and now the estimate is 1.7. So unfortunately, this massive drive that the Italian economy has had has already started to lose steam.
1.7% is actually quite a fast clip compared with much of Europe. Do you think that's actually achievable?
It depends. It depends on how the situation solidifies with the economy, with inflation, and I would also say with my sector, with the construction sector, which has been, as we all know, one of the strong drivers for growth post-pandemic. According to estimates, about a third of GDP growth in 2021 and 2022 came from construction, and now that is seriously starting to slow down, and it could be an issue. Obviously,
the government has just published its budget, €24 billion worth of tax cuts and spending commitments. That's quite a lot of stimulus.
So it really depends which lens you look through, and as you will have seen, there's a lot of union protests happening in Italy right now because everybody wants more for their own sector. From my lens, from an entrepreneurial lens, I would say my criticism is that there isn't any clear long-term vision in this budget. So we know in Italy, we're used to it, the budget laws are always, as we say in Italy, the blanket is always too short, or the tablecloth is always too short. So it's a struggle to try and make the numbers make sense. But I wish, as an entrepreneur, that there had been a clearer, longer-term vision for growth, more money spent on young people, more money spent on investment rather than short-term measures.
Yes, I mean, the statistics on the number of young people in Italy who aren't in employment or training are quite staggering, aren't they?
It's awful. Our number is the worst in Europe. It's 20% out of 10 million young people, so 2 million young people who don't study, don't work, and are therefore a generation that doesn't have a future. And it's just aberrant to me. Also, because if you then speak to employers are struggling to fill jobs. So there's a huge mismatch there, and it's a clear sign that our education system is failing this new young generation.
How does that manifest itself in terms of young Italians leaving the country and seeking employment opportunities elsewhere?
Well, we know that there is a brain drain going on in Italy, and it has been going on for decades. I was one of these drained brains, and then I chose to go back and work in Italy. And it's a fact. I mean, young people don't think that there is a future for them in our country. And I think a lot of it is also about the image that we portray rather than the reality. And that's a massive shame.
Now, your sector, construction, has created something like 200,000 jobs since the pandemic. You must be surely experiencing labour shortages now.
Huge labour shortages, because we need to bear in mind that prior to the pandemic, so since the credit crunch, we lost 600,000 jobs. Now we've created 200,000, and that has completely filled the slack. So there are no kind of workers who are not employed. We are completely in full employment, and we are literally stealing workers from each other, and the public sector is coming into the private sector and taking engineers away from us. According to estimates, we need to hire 65,000 people. We need to make 65,000 new jobs just for the recovery fund monies that are being spent. And then with all these new Green New Deal linked investments, we need to create another 150,000 high-skilled workers, and we don't know where to get them from.
You touched on green jobs there. Obviously, sustainability is becoming increasingly important to your sector. How much spending is that accounting for right now in overall construction investment?
It's a number that is rising. So as you will know, we had the super bonus measure, which went far beyond anybody's wildest dreams, probably also because the incentives were too high and the time period was very limited. And the numbers are staggering, over 100 billion euros worth of investment in this kind of green revolution. But then, as you also know, super bonus was suspended, rightly so, because it was a short-term measure. But in the medium to long term, we have to adhere to the green housing directive that the European Parliament is in the process of announcing, and that will oblige all European countries to basically make their real estate carbon neutral by 2050. Italy's impact is much bigger than countries like Germany because 70% of our buildings are substandard in terms of their emissions ratings. And so that basically means 20 billion euros invested every year until the target is reached, which is a pretty big number.
That was Angelica Donati speaking to me a little earlier. Now, the sustainable nutrition brand Huel has reported its first pre-tax profit after a surge in sales on the back of a big international expansion and new product launches. Huel, whose ready meals, powdered shakes and protein bars are now sold in more than 11,250 stores worldwide and in vending machines at locations including Heathrow Terminal 3, Manchester Airport and Birmingham Bullring, made a pre-tax profit of £4.7 million in the year to the end of July. That compared with a loss of £10.6 million in the previous 12 months. The news comes days after Morgan Stanley Investment Management's climate private equity arm took a stake in the business. Well, joining me now to talk about this is the Chief Executive of Huel, James McMaster. Hello. James, good to see you again. Were you expecting to be profitable at a pre-tax level at this stage in the company's evolution?
Yes, we were. We have had profit for several years actually since starting. We had a tougher time during COVID. Obviously, a lot of companies had inflationary headwinds. We were the same. And that definitely hurt us in 2021 and 2022. That started to normalise a bit, particularly with freight costs, and that's allowed us to improve our margins, and ultimately we've grown, we have scale, and we're now delivering healthy profitability.
So what's the sales mix now between direct-to-consumer and retail?
So we started off on Huel.com. Retail has built in the last couple of years. We're still majority Huel.com. However, in retail, particularly in the UK, where we are in almost half of all UK stores, it's absolutely flying, and our ready-to-drink bottles are going extremely well. So we expect to see retail growing as a proportion over time.
And is that the same overseas? I mean, I noticed with interest that your sales grew in the US at exactly the same clip that they did in the UK.
Yeah, so in the US, we haven't really pushed retail that hard yet. We will be doing so in general, and the US as a market for us is now our second biggest market. We're doing well online. We've launched some specific products like our Daily Greens powder for the US, which is a mixture of vitamins, minerals, nutrients, fruit and vegetables. That's also flying. So we're hiring more staff into our New York office, and we expect big things from the US next year.
What were the big product launches over the last 12 months?
Yes, if you think back to the early days, we started with a powder that you mix with water to create a drink, and actually Huel's evolved heavily, and now you can have a chicken katsu noodles for lunch. And that's allowing us to reach a wider audience. And we also recently launched a complete nutrition bar and a daily A to Z drink, which is all about having the right vitamins and minerals per your day. So complete nutrition, a huge wide range of products that we offer, and that's allowing us to appeal to a wider group of people.
And what about the manufacturing? Do you still do all your own manufacturing?
Great point, actually. So historically, we've used outsourced co-manufacturing partners. That's allowed us to scale extremely well. With the funding we raised this time last year, that's allowed us to invest almost £10 million in Huel's first factory, which is being built in Milton Keynes at the moment, and we should be ready to move in early next year. So we'll start manufacturing some of our own products, and it's a huge unit, and the team are really excited about that going live.
Milton Keynes doesn't strike me as being a particularly cheap location, though, to be manufacturing.
It's a great central location. It means we're about half an hour from our logistics warehouse, and we're actually buying a Huel electric truck to go back and forth between the 20-mile journey or something like that. So it's centrally located. It's also about half an hour from our head office in Hertfordshire.
So what will the Morgan Stanley Investment Management investment enable you to do?
Yeah, so obviously the credibility of being invested into by one of the largest banks in the world is strong, and it's also the sustainability arm. So there's a fund they call 1GT, which is all about eliminating 1 gigatons of carbon from the atmosphere. So the support they'll give us on improving and evolving sustainability is strong as well. And also as we navigate the next few years on what happens to us from an ownership point of view will be tricky, and I think it's nice to have them in our corner to help us work that through.
Well, it's always going to be a talking point. I mean, there's been speculation on and off over the years about an IPO. What can you say about that?
So about 2 years ago, we were looking at it, and at the time, the markets were great. 2022 onwards, they haven't been so good, particularly in the London market. So we were keen on doing our own factory. We needed funds to do that, hence we raised this time last year. At the moment, there's no pressure for us to do anything. We have the funds to keep investing in stocks, which is important for a consumer brand. We had the funds to invest in the factory, and we're very open-minded as to where we go next, whether it's an IPO or whether it's a partnership with a larger company, which might help us unlock certain doors and grow internationally. So we'll see where we end up.
Okay. And Idris Elba, he's a shareholder. Is he very active?
He is, yeah. So he came to our office last year, and Sabrina, his wife, as well, and they're both very pro healthy eating environment. We also worked with them on cocoa sourcing, so it's not that well known, I don't think, but cocoa is notorious for unethical sourcing with high modern slavery and child labour. So Idris pushed us to work with Tony's Chocolonely, who have an open chain model where they've got the best-in-class cocoa sourcing. So that's been a good move on that part.
Terrific. James, good to see you again. Thanks
you.
for joining me. That's it from me for the time being. I will be back at 4:30 this afternoon with the afternoon edition of Business Live. Hope very much to see you then. Cheerio.